A mortgage transaction is anything but easy, yet millions of consumers have been taking part in it and will continue to do so, some more often than others. It's a very important financial move on the part of the borrower that involves a large amount of money, a binding contract, and some very timely decisions that need to be made. Deciding to float or lock a mortgage rate is one of those choices a borrower will be faced with and inevitably will need to be finalized. Mortgage rates can fluctuate throughout the day depending on market conditions. There really is no way of knowing which direction the market will move, as well as what will happen with mortgage rates. It can become a high-risk game for anyone watching rates and waiting for that special moment. A borrower can allow the rate to float, which is basically a sit-and-wait position. If rates rise, the benefit will be towards the lender. If they drop, the borrower will benefit. Many borrowers choose to float the rate for a period of time in hopes that there will be a decrease. When purchasing a home, floating a rate can become a dangerous and risky game. In the case of a purchase, the loan is necessary for the purchase, and if rates increase too much, the borrower may no longer qualify for the loan. In some cases, if the mortgage rates increase, the potential home buyer may simply drop the whole transaction because it has become too expensive. When refinancing an existing mortgage, floating a rate is less significant since there's no specific schedule for closing that must be met. However, even in the case of a refinance, allowing the rate to float for months is not recommended since the credit file that includes all of the up-to-date documentation and verifications will only be acceptable for a certain period of time. Any borrower, whether purchasing a home or refinancing, needs to know how much risk they can personally tolerate. When purchasing a home, the sooner the borrower locks the rate, the better the whole situation will be. The loan file can then proceed to be processed and underwritten with the rate lock intact. This will eliminate any last-minute surprises due to unexpected market rate changes. Those who are refinancing should pick a mortgage rate that they're comfortable with and satisfied receiving. Once that rate is reached, proceeding with a rate lock is the best thing to do. Second-guessing themselves and the market can put the whole mortgage transaction in jeopardy. Since most borrowers do not hold on to the same mortgage for a long period of time, a small difference in mortgage rate is not going to make much of a difference to the total amount of interest paid by the borrower. Once the mortgage rate has been locked, the risk is removed and the mortgage process can proceed to closing. The bottom line is that the decision to float or lock the mortgage rate depends on the type of loan, purchase or refinance, the borrower's financial condition, and how much risk they can afford to take. At this time, mortgage rates across the board are so low, it would be wise for borrowers to commit to a rate lock as soon as possible and be done with it. Then they can sit back and relax and wait for the final closing.